Insurance policy provides a guaranteed payment for a percentage of your grape tonnage when Mother Nature negatively impacts your yields. Yield losses caused by adverse weather or naturally occurring perils are all covered under the crop insurance policy. Whether it's too cold or too hot, maybe you've got sun or smoke damage, it's all covered. Another growing concern for many California farmers has been drought, which is also included in this policy. Man-made causes of loss such as improper farming methods, adverse markets, or failure to secure labor are not going to be covered under the crop insurance policy. The deadline to finalize your crop insurance decision for the year is January 31st. You cannot purchase a policy after this date, so there's only a small window of time yearly where you can opt in or adjust your options. As a grape grower, you may consider the following reasons for coverage. First, this insurance is federally regulated and a premium subsidy is applied, making the overall cost of the program much more affordable. All premiums and administrative fees are not billed and due until September, so growers have most of the growing season covered before they ever have to pay a premium. Like all insurance, this coverage provides financial security and peace of mind in the years when you've been severely impacted by a natural peril. In addition, some ag lenders may require a crop insurance policy be in place in conjunction with their ag financing. Coverage is individualized to each variety and even down to the vineyard block by location. Agents will use a grower's actual production history and even their contract prices to establish the coverage on the policy. Your agent will need a minimum of 4 years and a maximum of 10 years to start the policy. If there are cases where there are not 4 years of history on file, some exceptions can be made. For example, if it's a newly purchased vineyard or a younger block. Just be sure to work with your agent and insurance carrier to understand your options in these cases. The production data is then used to generate an approved yield for the policy. Growers then choose to insure between 50% to 85% of their approved yield. The policy coverage selection is by variety type, so a grower can protect different varieties at different levels or opt to insure one variety and not another. When choosing a coverage, there are 2 coverage types. These are catastrophic or CAT coverage and buy-up. CAT coverage is the lowest, most basic option, covering only 50% of your average tonnage. The CAT coverage premium is 100% subsidized. There is no premium cost. However, there is an annual $655 administrative fee by variety. If a claim is paid under the CAT policy, it pays at a rate of 55% of the price per ton. For example, if Chardonnay is $1,000 per ton, a CAT claim would only pay $550 per ton for this loss. Buy-up coverage is an option that covers 50% to 85% of your average tonnage. Buy-up premiums will vary, but they are also subsidized. Growers only pay a portion of the full cost. The subsidy ranges between 38% and 68% and is associated with the level of coverage selected. In addition, the annual administrative fee for buy-up coverage is reduced from the $655 to $30 by variety. Another key benefit of the buy-up option is that growers receive 100% of the price per ton in a claim event. So if Chardonnay is $1,000 per ton, you're receiving $1,000 per ton for a claim. Growers should work closely with their agents to review these options and determine what level best suits their needs and their concerns. It's important to note that you can often insure a smaller vineyard at a buy-up option for less than the $655 CAT fee. Once a grower has selected their percentage of their yield that they want to insure, this becomes the policy's tonnage guarantee for the year. For example, an approved yield for a vineyard is 4 tons per acre. This vineyard is covered at the 70% level, so this means 70% of the 4 tons per acre, which is 2.8 tons, will be guaranteed for the year, either through the actual production of the crop or through the payment on the crop insurance policy. If a weather event occurs bringing the yield down to 1.8 tons per acre, the insurance policy pays the 1 ton shortage over all the acres at your insured price per ton. Because this policy covers yield losses and not revenue losses, smoke exposure and other quality loss claims are handled slightly differently. The claims adjuster will need to just take that monetary loss and convert it into a tonnage loss. When there is a possible loss, growers are advised to call their agent and file a claim within 72 hours of discovery of damage. There are no penalties for filing claims, regardless of the outcome. Unlike other types of insurance, there's no premium surcharges year over year for claims filed or paid. Because there are no claims penalties, growers should always hinder on the side of safety and file a claim right away, no matter how minimal the damage may be. It's important to mention that smoke exposure claims do require a little extra work on the grower's part, with the need of lab testing to verify smoke chemical markers of guaiacol and 4-methylguaiacol. Growers must take these varisamples from the vineyard prior to the harvest, and any lab testing required will also be at the grower's expense. If you are interested in purchasing coverage, as mentioned, you will need to do this on or before January 31st. That is the annual deadline for newly insured growers to select coverage and renewal policyholders to adjust their coverage. Growers will need to provide the name and tax identification number for their policy. This should match the marketing records, such as the winery contracts. The application will also need the general contact information for the policy, such as the address and the phone number. Our applications are also required to list all individuals and entities with 10% interest in the insured entity. For example, the policy name and vineyard are XYZ Vineyards LLC. Jose and John are the members of the LLC, so their full names and social security numbers will be required on the application. Additional paperwork will also be required by the Farm Service Agency. Some agents will assist in completing this step with the crop application. Because crop insurance is federally regulated, growers are also required to maintain records for at least 4 years. This would be weight tickets, payments received for the fruit, and winery contracts. Other key deadlines for grapes are the production reporting deadline of March 15th and the acreage and contract reporting deadline of May 15th. The March 15th production reporting deadline is the last date to provide the prior year's production if it wasn't available by January 31st. May 15th is the final date to amend the insured acres on the policy in cases where maybe some acreage was pulled or maybe a lease of the same variety was picked up after that 31st deadline. May 15th is also the final date for buy-up policyholders to have a fully executed contract in. This is only if you want to utilize your contract prices on the policy. If contracts are not received by the state, the policy will default to the insurance value per ton. The policy starts February 1st, but policyholders do not receive any bills until mid-August, and the premium is due September 30th. This has been a quick peek into the federal crop insurance policy. Please reach out to me or your trusted crop insurance agent if you have any questions about this essential coverage. I appreciate your time today and wish you a fruitful growing season.